Hello, dear colleagues. It's nice to see so many people attending. My name is Sergey Chernikov, and I'm from Russia, business school Mirbis, and I'll be presenting the International Trade in the Post-COVID World lecture. And the essence of what I was planning to tell you today can be roughly structured in three parts. So I was planning to speak about the short part on the what was the basis of the current situation, so a little bit on the past. Then I'll show you the overall view on what's the international trade today, how does it feel, and then I'm going to elaborate on what probably the results of this situation will be. And in between, we will be, if you have questions, please write them down in the live Q&A, and we're going to get them. And approximately every 15 minutes, I'm going to be switching to questions and answering them. So that's the plan so far, and hopefully everything will go all right. Let me just start off here and share the screen with you. If Zoom will help me, which it doesn't, doesn't really help. Okay, here. Hopefully you're now seeing everything. So again, welcome to the class. Hope you're having a good time. And let me start off with a short overview. By the way, some of the slides, just to prepare you for the inevitable, some of the slides will be half English, half Russian. Some of the slides will be sloppy like this because I don't have a great design skills, but you see, I'm doing my best so far. And the reason I have some of the slides in half Russian is because sometimes you get a very good picture and it's just impossible to find it in English, and it's really hard to translate it. But I'll give you an explanation. It's not that tough. Russian is not that difficult after all. So what I wanted to speak in the beginning is a little bit about the past of the international trade. I'm not going to go into huge detail, but if you open up any economic textbook, basically the economy of the world and any given country will look something like this, like you see in the screen now. So there's the real economy or industrial economy, the backbone of the internal market. There's a processing line that processes resources into a whole lot of material merchandise. And this is all accompanied with the grease, I would say, of services. So that would be the transport, the research and development, education, medicine, everything that keeps this process going. And there's a specific type of finance, of services, which is finance. And the reason it has been specific for the last 30 years, I would say, is because it's allowing to cover the risks that accompany the processing line. And the important part is that any economy is rotating around the demand, the final demand. Now, as you probably all remember, there are only two types of finite demand in the economy. So that would be the governmental demand and the personal demand, the consumption demand. So business, in theory, is not a finite demand, because whatever business is consuming, it is consuming for the purpose of reselling, doing something forward. Now, the situation in the world has been over the last years that there are basically 2.5 sources of huge finite demand in the world. That is the North America, that is Europe, and there is also the East Asia, so China and maybe India. Now, when I'm saying finite demand, I mean both governmental demand and the consumption demand, the personal expenditures of people. And over the last many years, let's say about 40, the largest amount of consumer demand was situated in Europe and USA, because they had the largest share of so-called middle class in the world. So China has only appeared on the map of demand recently, but there's a problem, because the Chinese middle class is completely dependent on the North American and European middle class. So far, China's wealth has been rotating around the status of the world factory. So this is the kind of trade patterns that you see on the screen that have been around for quite a long time. And the core here is the situation that looks like this. This is my view of modern art, I would say. I guess I should sell this for 50,000 euros. Maybe people will pay. This is the essence of globalization. So there are three big pillars of international trade that were supporting the whole system. So that's the World Trade Organization, that has been looking out for looking out so that there would not be any protectionism in the world that would stop the flow of the free flow of goods. There is the International Monetary Fund that has been giving short-term credits to countries so that their currency is not fluctuating too badly, which would in turn damage both investments and trade. And there's the World Bank that has been giving long-term, low interest credits to build up the infrastructure, mostly for the international trade. And in this situation, we had an outburst for the last 30 years. We had an outburst of transnational corporations that have been expanding like crazy for the last 20 years and now practically dominate the international trade. I mean, according to the latest reports that I've seen before the crisis and the COVID, it looks like the transnational corporations are responsible for over 2/3 of international trade still. Now, this situation has been accompanied with creation of the value chains that are spanning the whole world. We all know that if we buy a car, which says Das Auto, Volkswagen and everything, and we break it into spare parts, we'll find out that the Das Auto part is accounting only for about 30%, because the other 70% are coming from the rest of the world. Some are from China, some from France, some from Russia, some from Thailand, you name it. So it's only the branding that is national. The insides are usually international. And this is the result of the span of the globalization and the value chains that are going across countries all over the world. This is just a sign of how this value chain economy across the countries has been developing lately. You see that the intermediary goods have been consistently higher in terms of trade than the final goods, and certainly higher than the primary goods. Now, this whole system broke down. It seems like it broke down in 2009 and 2008. There are a lot of reasons why it broke down. There are a lot of theories. The official reason is that in USA, there has been a subprime mortgage crisis, which burned everything down. It's not the best theory to my mind, but why not? Let's just have it. For us, it's important that it happened. The crisis happened. And since then, we've been told that there is a recovery. Unfortunately, the result of that crisis was a huge decrease of the final demand, as you see. And although we have been looking at the media that there has been a huge amount of resurrection, green grass growing and everything after the crisis, it doesn't seem like that. This is one of the slides from an investment company report, internal report that I have I got my hands on some time ago, which shows the resurrection of the 800 greatest non-financial corporations of USA after the crisis. Now, the point here is that the blue line is the capitalization of these 800 corporations, non-financial, which is important, so they are the real economy. Half of them are transnational, by the way, while the red ones are showing the indicators. So on the top left, you see the return on equity, so the output of the capital of the corporations. Below it, you see the turnover of assets going straight down over 4 years. To the right from ROE, you will see the income. So that's basically the total income, the gross income. And then the final slot there on the below is the net profits, which are also going down. So 800 greatest corporations in 4 years after the crisis were showing this. But at the same time, if you look at the financial indicators, you will see that Dow Jones has been rocketing at the same period of time. So has Standard & Poor's. And even more, you see, now it has been feeling great. Frequently, if we look at the media, we will see that in economic media as well and governmental reports, these charts, Dow Jones and Standard & Poor's, are frequently shown as the signal of resurrection. But we also know that there has been 4 quantitative easing, quantitative easing sessions by the leading central banks, which is the Federal Reserve System of USA, European Central Bank, English Central Bank, Japanese Central Bank, and so on. So the greatest 10 central banks have been creating liquidity in rounds. So you see that in the same period, there's been billions of dollars just injected into the economy, giving rise to these wonderful figures from Dow Jones and Standard & Poor's. So it's not that, the point is that it's not that there has been any significant economic growth of the real economy. It's the injection of money. In European Union, the situation is pretty much the same, or has been pretty much the same after the 2009 crisis. And you see that the same ROE, the turnover of assets, the income, and the net profits are showing, well, it's not great. It hasn't been brilliant. The media was much more brilliant than the real output. And by the way, these are the 500 non-financial corporations of European Union, same report. So there were 800 non-financial USA corporations and their indicators aggregated together. And these are 500 European ones. And actually, if you look at the indicators of European Union, I could give you a ton of these indicators, but they would pretty much have the same kind of view. If we take a very basic indicator like construction, which is one of the most national industries in any country, you can see that the resurrection after 2008, 2009 has been incredible, which is, quite sarcastic. If we look at the industrial production at the same time, it has not been great as well after 2008. It has been actually falling for the same for almost 5 years. And it certainly didn't reach the pre-2009 crisis levels. And with the GDP that the GDP growth paces that the greatest two economies in European Union have been showing, well, they were not incredibly great. So, and they're still not. You see, now last I looked, the European Union is promising that they are going to have a minus 15% GDP drop. in 2020. So that was the last 10 years, maybe 12 years in terms of economy. So the point is that there practically has not been a great economic growth over these years, and the growth that we have seen has been largely the result of financial injections. So that's part number one. Point number one, 10 years, no practical economic growth, maybe outside China. Let me check if you have any questions so far. Looks great. Yeah, I'm loving it as well. Okay, so that's the interesting background that I wanted to show you. Now, by the way, if you suddenly have a question, just type it. I'll be switching back and forwards from time to time, and just to see if there's anything urgent going on. So, how do I see international trade opportunities for startups? Let me come back to that in the end of the lecture. I'll remember that. The startup, because I'll be sort of summing up the whole thing, and I wanted to say a couple of things on innovation, and that's probably where the startup question will fit greatly. So I put a note here for myself. I'll remember that. Yeah, maybe meanwhile, let's slowly and sadly go on. Here's this screen that's sharing. He's trying to share desperately. Oh, while I was sharing, somebody typed, sorry, wait. How do I anticipate the ratios governed versus will change in the aftermath of COVID? What major pattern shifts are anticipated? You know, from what I've seen so far, the government spending should increase over customer spendings, and this will probably be the case for the next, well, my personal belief that we're going to see this in the next 5 years, but some of my colleagues are much more optimistic. They're saying, well, it's going to last for a couple of years only. But I frankly don't see how it can heal so quickly. Therefore, I'm personally expecting that this government over consumer dominance in terms of spending I'm sure it will last for quite a while, because practically this is just common sense, by the way. Every time we have a huge crisis, the government spendings go up and the consumer spendings go down. This has been in the Great Depression in USA. This has been like this in practically every crisis all over the world for the last 100 years. So, and now if we look at what's happening in USA, what they're doing now in terms of governmental spendings is just unprecedented. I mean, it's just like a tsunami. Can you imagine? They have increased the subsidies, you know, welfare, unemployment subsidies, pensions, and everything almost 5 times. Basically, if you were working as an office worker in an office and you were getting $1,000, you got fired. Now you're getting $2,000 straight from the budget. So I guess this is this will be the practice for the next couple of years. As of the COVID itself, I'm not sure. I have a feeling that there will be a bouncing back, but my position on COVID is very straightforward. As you've seen over the last 10 years, we didn't really have any huge economic growth. Therefore, we can't say that actually COVID actually is the reason everything is bad, because it has been bad. The problem with COVID is that it just tipped us over. So we were sort of the world was sort of balancing on an edge, and then suddenly COVID came up, all these lockdowns started, and we started just an inevitable way down. It's not that we were just growing and everything was just unicorns and rainbows, and then suddenly, oh my God, COVID, and we started falling. No, we didn't. It was like that. Therefore, whether there will be another outbreak or there will not be another outbreak, it will not drastically change the situation to my mind. So, but I'm certainly hoping we're not going to get it. I'm sick and tired sitting at home myself. So, yeah, bouncing back, yes. The suggestion that the international trade accounts of countries trade, and the hypothesis that international trade is less so important as presented. Yes, certainly there is internal trade, especially if you're big. But as you know, there are not many big countries in the world. And I mean big in terms of populations and internal markets. So there's only a handful of big countries. So if you're a big economic system, yes, you have internal trade, and seemingly your international trade should not be of much importance. But practically speaking, if you just even go to a supermarket in a big country like Brazil or European Union, in any of the European Union countries, you will suddenly find out that the majority of products that are there are made with spare parts or resources that are coming from all over the place. I don't think that if we have a lockdown of European Union will be able to produce a car, I mean, from start to finish, because there's just lack of many natural resources. I'm not sure that if we have a lockdown of European Union, I mean, no imports, no exports, the European Union will be able to produce a smartphone, no rare earth metals. So international trade is important. You can't just say that it's not too big. Cohesion. Let me go forward, and I'll answer the questions that I missed now in a moment. If we look further, so what's going on in the international trade? Well, no surprise, everything is great. I've gathered some of this World Trade Organization, UNCTAD reports for you, just to show you. I mean, you can go and take a look at World Trade Organization reports, UNCTAD reports, IMF reports, basically any reports, and you'll see pretty much the same situation. The year-on-year percentage change has been going down, and it has been going down since the second half of the 2018, speaking about the COVID and everything. And it hasn't been, and it has been going down before as well, as you see. So in 2015, 2016, it hasn't been great. Again, speaking about COVID. So COVID didn't really start this. The international trade didn't feel great already at the times when there was no COVID. You see, in agriculture products, in mining, in manufacturing, it has been pretty much stable since 2008. Just compare the growth before 2008 in all of these three charts and the growth after 2008. So, and the forecasts, of course, are pretty interesting. According to World Trade Organization, different regions suffer differently from COVID and from this outbreak and everything. Some Central America and South America has suffered slightly more in value, not as much as in volume, of course, but the value is always higher than the volume. It's no big deal. And this is, well, by the way, this is World Trade Organization idea. According to UNCTAD ideas, the most suffering region is Asia. So this is where this is probably the only place where they don't coincide in their evaluations. So all the regions suffered. The World Trade Organization barometer, which is the blue line here, it is a special indicator that is predicting where the trade will go in approximately 3 to 4 months. Now, if you look at the March 2020 barometer, it showed this picture. Then I checked it in June, and it was by far greater, you see. So the barometer has been okay over the last 10 years. It's been an okay predictor of what's going on. And I hope that will change this time, because what it's showing is not optimistic at all. And unfortunately, all the OECD and developed countries are reporting the drop in their trade. I mean, these are the greatest economies in the world so far, and the chart is pretty much the same everywhere. If we also take a look at the services, surprisingly, the same picture, everything going down. So 2018 compared to 2019, no good at all. And you see, I'm always, all the statistics here, 2019, although we are already in December of, in September of 2020, but the point that I'm making now is that, again, we've been, for 10 years, we've been balancing, and then currently, the COVID situation happened, the lockdowns, and it simply tipped over. So we went from being bad but balanced into worse and unbalanced. So that is what's going on currently in the trade. Almost everything is falling. So, and we don't really know how long it will take, but the barometer doesn't give us much optimism. So let me see what has been happening with the I'm giving you a lot of bad mood today, I guess. Perhaps the illusion of the need to go international. That's the refrain. The illusion, allure. Yeah, the idea of go international, it has been great for the last. The question here is that perhaps the illusion of the need to go international is overrated, which is true. I mean, the world is changing now, and for the last 40 years, the idea of if you want to earn money, you have to do something and export it. It was good. This was a correct idea. I mean, we all know that the margin, the profits in exports have been always higher for the last 20 years than the working internally. The world economy seems to have been developing, but currently the world seems to be changing into a more domestic orientation. So that is also the how to say, that is the expectation, by the way. So, and that it is very interesting that you're asking this, because this the next I was going to show you the screening, if I can say, and the summary of the research and the reports that I've been reading over the last half a year about what's going to happen. Well, because frankly, nobody knows what's going to happen, but there are a couple of evaluations on that. So I hope you're seeing this. So what about the future? So where is it going? Will there be or will there not be an outbreak of COVID is, to my mind, is a technical issue in the end, because it has been bad. It has been bad in terms of economic growth. The international trade has been stagnating. Now it's falling. And so what's the future here? With COVID or without COVID, to my mind, it doesn't really matter. Now, the issue is that we are suffering, and first of all, European Union and the USA is suffering from the lack of finite demand. So the consumer, it is not a secret that over the last 20-ish years, maybe even 30 years, the American economy has been completely dependent on the credit system. So the amount of American debt has already become not even a joke, but a common knowledge. So American consumers have been consuming the way they have been consuming, not for the reason that they are earning this money, but because of the credit system. I mean, everywhere in the world, you know that if you stop 100 Americans on the street and ask them to show their pockets, majority of them will have like 15 credit cards and $1. So that system seems to have stopped in 2008. And now we're witnessing a deterioration of final demand. And as you understand, the whole system, this resource processing services, risks, and everything has been built up depending on the previous amount of demand. So what will happen is that the whole system will start shrinking in an unpredictable way. We're actually witnessing that in a way. What are the predictions? Let's put it this way. I've summed it all up in 4 sentences. And okay. So I'm sorry. So the first idea is that what we see across developed countries and developing countries alike is that the consumption spendings are shifting to the cheaper side everywhere, literally everywhere. People are becoming much more rational. And as a person from a marketing background, I can tell you a lot of stories about this, how this is transforming the world. And there's less and less middle class in developed countries. They're shifting to poverty, basically. So if we take 10 people from the middle class that have ceased to be middle class over the last 5 years, 7 of them moved to the poverty, and 2 of them moved up to the more richer, let's say, class, richer income, and only 1 remained. So there's a slight but steady increase of the poor population in the world. Well, when I'm saying poor, just bear with me because I'm Russian, my English is not incredible. I mean lower income people. So that's the first point. So the second thing is that there's a shift of the structure. So during the economic crisis, traditionally, the primary resource prices should be decreasing because there's a drop of demand in developed countries. Unfortunately, the developing countries, when they suffer this, they start devaluation of their currencies in order to keep their governmental income the same. Unfortunately, this devaluation causes a drop in imports in their own markets because the population suddenly became poorer while the import prices went up due to devaluation of a national currency. So they stopped buying. And that means more loss of exports for developed countries. So this loop seems to have started some time ago in the world. It hasn't been visible yet, but I've seen several interesting articles on this so far. So this is probably the loop that's going to continue looping, which will most probably give rise to a lot of protectionism, which we have seen over the last 10 years. Every World Trade Organization report is witnessing the increase of protectionist measures compared to liberalization measures. And this will give rise to and bigger value to integrations. So because if you want to sustain a certain level of technology in an economic system, and that's where we go to innovations, you need a large market. You need people with demand. Therefore, the number that I have seen is that if we want to keep a smartphone, basically, and all this digital economy that we're used to, we need to have at least 300 to 500 million people inside an integration. In such an integration, we can launch import substitution policies and start producing our own iPhones. Well, iPhones, you mean it's just a word, technological products. They will be of less technology than they are now because iPhone is selling across the whole world, and their market is basically half of the world population. But if you're working in a 500 million people integration, obviously you'll be clinging towards Nokia, the indestructible model. So there are a couple of ideas on which parts of the international trade in terms of products will feel better in the next coming years. We can see this by the pattern of drop of sales in USA. You see that the clothing industry, the furniture, the electronics, and drinking places, and so on and so forth, these have suffered a lot. And we can expect that the international trade in these segments will suffer will suffer greatly. Whereas food and beverage, like building materials and especially healthcare, will most probably suffer not as much. If we want to take a look at the example of where we're going, to my mind, this picture from the 100 years ago has a good has some good thoughts inside them. So this is what the world looked like in terms of integrations, with pretty much locked away from each other, with a lot of protectionism, each producing their own technology stuff, technology items, and practically not trading with each other. So maybe this is the future where we're going with the international trade. And that's exactly what one of you has asked. Like, going international seems to still remain as an idea, but it starts changing in its meaning. So maybe in these integrations that we have now is a start of the future international trade. Unfortunately, we are living in this time, but it's still fun to watch it from the first row, isn't it? So this is the points that I wanted to make in the 45 minutes that we have for this session. And let me see what has been happening. Now, going back to this startup thing, which is pretty, to my mind, important. The innovation system that we have today, with all the technological hubs, with all the startups, Silicon Valleys and everything, heavily relies on the finite demand. Because you see, it relies on credit system and it relies on the finite demand. If it's an innovation that is cutting down the costs, then I have a feeling that it can live in this world where there's lack of money. If it's another toy, like, oh my God, I have created a car that is working without a driver. Wow, it costs $1 million to sustain. Wow, it's so cool. What is the point? Why can't you just hire a driver? There are millions, there are 1 million people out there without a job. I consider it more of a toy thing. So this thing, to my mind, is questionable in this world. And yes, I do feel that there will be a bigger global cohesion, but more on the regional cohesion side. because it's just inevitable. If you want to have a smartphone, you need to gather up people and countries around you and protect these markets for yourselves. So the rise of protectionism is going up. And as for yuan money going to be the reserve money in the future, I have a big feeling that every region, this protected region, will have its own reserve currency, because every region will be built as a local globalization. Today, the whole globalization is built around US dollar, whether European economies like it or not, but euro has always been a derivative of dollar. And although it seems to be on a better track, but in the end, the whole globalization is rotating around dollar. You can just look at the price of commodities. They're all in dollar, not in euro. So I have a feeling that if China is going to have its own landlocked region like this, it will certainly have a yuan. But in terms of exchanging between regions, it looks like the gold is coming back. But I'm not sure. It's too wild a thought. It's too innovative. Oh my God, this is a huge question from Mr. Thomas. I mean, we're thinking under protectionism based on the idea harder and less, it's harder for some. Well, certainly smaller countries have to group up with larger countries for sure. That's the way it was for the last 30 years, and it's becoming increasingly important now. Where that may, any insights on new demands at macro level? From what I've been reading so far, it looks like, well, if you put away all the professional optimists that are working for the government, and they have to say that it's fine, we'll have a spike, we have a bounce very soon and everything, they're not explaining how it's going to happen, they're just saying it will happen. If we put these guys aside, it seems like this post-COVID world will be very different from what we're used to in terms of globalization. And there will certainly be new industries that will feel better. But and nobody knows which one. We all want to know for sure. But one thing is that there is probably going to be a decrease in technological level everywhere. Because practically speaking, if you have a refrigerator at home, do you really need it to have a Wi-Fi? No, you don't. Do you really need it to have 7 different regimes for delicate food and for your mushrooms that you keep in there or whatever? No, you don't. You need a basic model. And the more poverty is going to spread around the world, the more it's going to be popular, a basic non-killable model. So I think that is something I read several times in different articles. I think it has a point. At least it fits with the other ideas. And finally, the unconditional basic income. What do I think about it? Frankly speaking, I have no idea. This is something that is so new to our world, and it's so different that something that we used to. But it's on the one hand, it's sort of funny because having an unconditional basic income practically means that we're coming back to the Soviet Union economic system, right? Because if you have an unconditional basic income the way you have it in US now, that the government just giving you thousands of dollars for nothing, this is causing inflation in market economy, and you can't buy anything with that anyways. So that means somebody has to regulate the supply of goods, and welcome back in time. That's fun. So that's my idea about unconditional basic income. Okay.